Hey guys, so this question people always asking, how much can you actually make trading Forex? This is a very interesting question, and I know you hear a lot of things out there. People are saying, oh, I'm making $25,000 a month, I'm making $50,000 a month, I'm turning $500,000 in a year, crazy numbers, and you're wondering, is this even possible, and how can I make that money? Now, I'm going to answer the question, how much can you actually make? Of course, there's no specific number really. I'm going to give you a way in which you can actually calculate in which you can actually calculate how much you are likely to make based on a number of assumptions. So if you use the same formula based on your own situation, you are able to come up with an average number and a realistic expectation. So this video is basically supposed to set that realistic expectation for anyone who wants to trade Forex, so that you don't get into the market thinking you're going to make billions of money or millions of money in a day or 2 days, in 1 month, in 2 years. No, that's a lot of BS. You see a lot of these Instagram gurus, Instagram traders, they flaunt wealth, they flaunt cars and mansions and stuff like that. Of course, they don't tell you behind the scenes what actually does happen, how much risk they're taking, because there are people who can actually make over 100,000 in a month. But the question is, how much risk do they take? What's their account size? And what is the position size? How much do they actually have, and how much do they actually risk in the market, and what position do they actually take? There are a lot of questions you need to ask yourself before you just jump in and start thinking, oh, you're going to make billions and millions of money. You need to know how much are these people risking. And they also need to tell you how much they lose before they get there. They also need to tell you if it's real that they're making that kind of money. There are so many things that happen. So don't go online buying lots of bullshit about how much people are making, because most of the time that's not the reality. And they never actually tell you what is behind that. They don't tell you anything behind the scenes. They tell you what you want to hear. That's how the world is. Social media is that way. People show you what they want to hear. If it's a picture, somebody poses for it, they look nice, they put on makeup, then they show you what they want to show you. So don't let those things stress you so much. Don't let someone flaunting wealth make you think less of yourself if you're trading and you're making little money. Or if you're starting, don't feel intimidated because someone is making millions. That's not true. So in this video, we're just going to tackle how much money can you make and how can you have realistic expectation. Because again, some people want to leave their jobs. Some people want to, start trading full-time. So they're wondering, at what point do I actually start trading full-time? Of course, as a finance coach, I would tell you that you can only stop working if you are consistently profitable with Forex, and if Forex is giving you the same amount of money or even more than what you are earning in your job, and you're ready to leave your job. It's usually a step that you should not take if you're not sure. If you're not sure, consult someone like me. You can consult any financial advisor, any financial coach that you know, but make sure you don't make that mistake. Move on from your job and then you realize, oh shit, I can't do this. This is too difficult. This is too taxing, So guys, we're going to answer the question in a very simple way. I'm just going to give you how do you actually calculate and have a very realistic expectation based on a number of assumptions. Because if we had a specific number, it would be easy, but now we don't have a specific number. Trading requires time, requires skills, requires a good brokerage, requires money. It looks at the position size. We have what we call the batting average. We have the frequency of trading. So there are so many things that can determine how much money you make. Because sometimes when you look at it from a batting average perspective, then the more you actually flip the coin, the more you're likely to win. So the more times you trade, the more times you're likely to make money. But how true is that? Let's see. Friends, Money Matters here, and here we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. So let's look at it. Very simple, very straightforward. I'm going to be scribbling things on my screen just to show you in a visualized manner how much you can actually expect. So before we go to the screen, let me just mention a few things. Number one, forget about Instagram and those people are flaunting wealth. It's BS. That's the most important thing. Focus on your trading, focus on your skill, focus on looking at it like a job. Treat it like a job, like someone is supervising you, because nobody will supervise you when it comes to trading. So your risk attitude, again, this will determine how much you take risks in the market. So you need to know your risk attitude. how much risk can you take? Some people risk 90% of their account in one trade, and sometimes it goes well and they make lots of money. So your risk attitude will determine how much you trade. So normally you should just risk 2% of your account or 3% of your account, right? And if you're a beginner, 2%, good. So if you have $1,000, you'll be risking around $200. Just 2% of your account in each trade. Each trade you take, make sure you're not risking more than $200. That is just 2% of your account. So that even if you lose that trade, you still have a considerable amount of money to actually take other trades. That's very important. So your risk attitude will also determine how much you're going to make. But I'll tell you how you're going to calculate that. Then of course there's the position size. Every trade has a position size. There's the normal lot size, the mini size. Everyone is taking different position sizes. So if you take a big position size, that will require a lot of margin. That will mean you're risking way more. So the size of position that you take determines how much money you're likely to make. Again, we're going to look at that, and I'm going to tell you what position size you will take, and that will also just depend on how much you're risking, right? And then of course your target, your objectives, your capital. Those things are very important. So you can't have a target of $100,000 a month or $10,000 a month if you have a capital of $2,000. It makes no sense. It's not logical. So for you to make good money, you must also have a good account. So that I don't have 500, but I'm targeting 10,000. It doesn't make sense. Either I'm going to be using too much leverage, or I'm going to be taking too much risks, and I'm going to lose that account. So that's basically betting. Just go to a casino in Las Vegas and hit the betting tables basically and bet like a crazy person, because that's exactly what you're doing if you're targeting to make a large amount of money from a very small amount of money. But that doesn't mean you can't grow a small account with time and make money. You can. And then we have something called the batting average. Batting average just means how many times you flip the coin. So if you want to get heads or tails, you have to flip it many times for you to get to know averagely how many heads did you get, how many tails did you get. So your batting average in the market will just depend on how many times do you enter and exit the market. Basically, how many times do you place your trades, how many times do you win, and how many times do you lose. Because let no one lie to you that they don't lose. Everyone loses. What matters is you win more than you lose. So your batting average has to be perfect. If you have a good risk reward ratio, meaning every time you risk a certain amount, you're getting like double or triple, then it means even if you lose more, you will still come out the winner. That's how easy trading is. So these are the things you need to consider before you get into the calculation. Otherwise, let's get into the calculation. Let's see how much exactly will you be looking to make. So guys, so here we are guys. So we're looking at how much you can actually make while trading Forex. Trading Forex is easy, but you have to be disciplined. You have to know what you're doing so that you're not gambling, and you have to do exactly what your strategy says you should do. So you should not be deviating from your strategy and expecting to make money. So it's very simple. So we're saying that you have an account of $500, right? This is what we said you should begin with. So this is your account size. This is your account size, yeah? So if you want to know how much you can actually make trading Forex, if this is your account size, the first rule is that you want to look at how much will you be risking of your account in each single trade. How much will you risk in each single trade? And I say 2% would be a good number. 2% would be a good number to risk. So 2% of 500, it means each trade you are risking only 2%. So 2 divided by 100 does that, you'd be risking only $10. So you always have 490 safe money that cannot go wrong in your account. And that's how you grow a small account. That's number one. Number one rule, look at how much you're actually risking in any single trade. The second rule is, of course, the batting average, which I call the batting average. How many times do you lose and how many times do you win? So we're going to make an assumption here that you know how to trade. You can do a few, mouse clicks and analysis here and there and make a good trade. And therefore, your batting average should be around, your win-lose rate should be around 10% to 40% of your account every month, right? So you can only make that. Let no one lie to you that you're going to make 100% of your account. It can happen, but it's rare. We want to be realistic as much as possible and give people very realistic expectations. So here we're going to say the win-lose rate. What is your win-lose rate? Yeah. How much time do you win when you trade and how many times do you lose? So in that percentage, you're going to say, okay, so let's say just winning 60% of the time. Sorry, you're just winning 40% of the time and you lose 60% of the time, right? So normally with a good strategy, you should win at least 40% of the time, right? And lose, even if you lose 60, you still come out the winner. Why does that happen? Because of the risk reward ratio. Each time you're risking, let's say $100 on a trade, you should be able to make $200. So if you're risking $100 on a trade, you should be able to make $200. Yes. So it should be 2R. So this is the risk. So you multiply this, what do we call the 2R? That will give you 200. So each time you should always try to get 2R out of your trade. And if you get 2R out of your trade, you will always come out the winner, even if you lose 60% of the time. This is what we call the batting average. So even if you were to lose 60% of the time, it means each time you flip a coin and you get a head, you get in 2. But each time you flip a coin and you get a tail, it's only 1. You lose 1, right? So that way, if you do it as many times as possible, even if you lose 60% of the time, you still come out the winner. Hey. And you win only 40%. You still come out the winner. So the batting average really matters, right? So when you come down here, anytime you lose, you should always be able to multiply R, get a 2R, or get a 3R, meaning 3 times the risk level, three times the risk. So if you're risking $10, you should be getting 30. If you're risking $20, you should be getting 60 or 40. So that will also tell you how much you can actually make with your account size. So now you know how much you're risking. You're risking only 2%. And you know how much you should be getting on each trade. So each trade should at least give you 2R or 3R. Now, the general rule is that if you have a good strategy, you should be winning at least between 10% of your account to 40%. Yeah. So you should get at least 10% of your account to 40% in a month, in a whole month. So if you have 500, it means how much you're going to be making out of that is 10% of 500 on the lower side if you have a good strategy, and 40% of the higher side, and sometimes it can be more, right? So with 40%, how much will you get? 40, 100, 200. So if an account of 500 is making you 200, that is an exemplary performance. There's no business that can give you that. So you have an account size of $500, it's making you $200 a month. That's good. So you can do the calculation with higher amounts. You can put 1,000 here. You can now just change these numbers and play around with it and see how much you can actually make. Like I say, it's very straightforward. It's very simple, really. The percentage of your account that you're risking, your batting average, your win-lose rate, your risk-reward ratio, and then you want your strategy to give you at least 10 to 40%. It's that simple. But here I'm making assumptions, a lot of assumptions. You have 500 and stuff like that. I'm making an assumption that you have a working strategy. I'm making an assumption that you only risk 2%, which is good. I'm making an assumption that you have the mental capacity to trade. Basically you emotionally stable. So there are many assumptions I'm making here, but at the end of the day, you must trade if you can. You must only trade when you can, not just trading for the sake of it. So I guess that explains it. It's a very simple calculation, really. I don't want to complicate it. There's one that's called the expectancy rate, which is a bit more complex, but I think this is easier for you to start knowing how much you can actually make from trading. So if you wanted to make, let's say monthly, you want to make $2,000 or $4,000, you just replace these numbers and you get to see how much will replace your salary. So if you want to stop working and get into trading full time, do a calculation of what account size do you need so that you can only risk 2%. And if you risk 2% and you trade every single day, your win-lose rate should be, your win-lose rate should be good, and your risk-reward ratio should be 2R, 3R, 4R, and you should be earning at least 10% to 40% of your account. So that will tell you how much you actually need. If you don't have that much, don't stop working, because you will be disappointed. Man, this is one of the most difficult topics to explain, but I do hope I did explain it well and that you understand. You can just place your account size here, take the percentage out of how much you want to risk. You can put it to 3%, let's say 4%. I don't know if you want to risk more. And then your batting average, and then your frequency of trading also matters. Batting average and frequency of trading almost the same thing. But frequency of trading meaning how many times do you trade in a month? You can't expect to trade in a month 2 times. Then your batting average will be very low, definitely. Because what if you lose the 2 times? So frequency of trading should be well determined. You know that you're trading every single day, probably. So if you're trading every day, the more you trade, remember, the more you flip the coin, the more you're likely to win. The more you flip the coin. The less you flip the coin, the more you're likely to lose, because at the end of the day, they will balance out. You just loss, probably. So frequency of trading must be considered. Duration of trading, don't have those daily targets, have like a monthly target. And if you are losing in a month, then you have the wrong strategy or you just don't know how to trade. Guys, I hope that was helpful. Bye and see you in our next video. Please subscribe, share, and comment. Let me know what you want us to do next. I have a few topics that you gave me last time. I'll be working on them soon. Don't worry. Then we will now get into technical analysis.
One's a company, two's a crowd, three's a party.